A pleasant good evening to you all, and welcome to today's discussion, Entrepreneurs and Taxation. This discussion is brought to you courtesy Western United Credit Union Cooperative Society Limited. This evening, the focus shifts to corporation tax, business levy, bookkeeping, value-added tax, updated annual return requirements, and tax-saving opportunities. You will gain valuable insights from Colin Ramsey, partner at Ernst & Young. With over 24 years of experience, Colin guides domestic and international clients through tax complexities in Trinidad, Tobago, and Guyana. Also joining us is Risa Young, a seasoned expert at Ernst & Young with over a decade of experience. Specializing in pay-as-you-earn, VAT audits, and tax compliance, Risa provides valuable guidance to clients in various industries, expertly handling tax returns and disputes. At this time, we would like to take this special opportunity to introduce our host for this exciting discussion, Mark A. Ferret, President of Western United Credit Union, an inspiring lecturer, entrepreneur, advocate for superior customer care, and credit union and cooperative societal specialist. Mark has over 38 years of cooperative management experience. Welcome, Mark, and welcome all. Thank you for joining us today.
Thanks, everyone, for attending. For those of you who were here yesterday, you know that you are in for another dynamic treat, full with great information that can assist you as you build your entrepreneurship. And in addition to that, I would hope and pray that those of you who did not have an entrepreneurial journal yesterday, that you would have made it a point to get one for today's session that is going to be very, very dynamic. Now, of course, we have the two main experts, Colin Ramsey from Ernst & Young, and we also have Risa Young, also from Ernst & Young, two brilliant professionals who have been helping the organization educate and build the membership in various areas. And I want to thank you guys for being here with us yet another day. We also have with us this evening who will be paying particular attention to the bookkeeping aspect of the session this evening. And we have Ms. Fenella Sam, our accountant. And we also have our assisting accountant, Mr. Andrew Matthews, my apologies. So they are going to be part of the session this evening. So this evening's session will mirror yesterday's session. But before we get into this evening's session, Colin and Risa is going to do a quick recap. You know how it is in school. When you go to class the following day, Miss or Sir will give you a recap from the day before, so at least refresh your memory. And Colin has also prepared some of the answers for some of the questions that were asked yesterday. And I know that sometimes, you may think that it's 2 hours and a half. We have plenty time. We know how the time goes by very quickly. And for those of you who would have recently joined, we will be doing a recap. Colin and Risa would have taken the time during the course of the day and look at some of the questions that weren't answered yesterday, and they came with answers today. I would admonish you all again, please put your questions in the Q&A, and Mr. Aaron Williams, he is going to be manning that section along with me, and we will be asking questions today as we go along throughout. So please do not be afraid to ask your question. We are here to learn, and some persons may be asking, yes, both day 1 and day 2 will be published on our website, and it will also be published on our YouTube platform. So the information that was taught both yesterday and today will be made available to you in addition to the slides. So without further ado, I now present to you Mr. Colin Ramsey and Miss Risa Young. Thank you guys for your time and dedication as usual.
Thank you, Mark, and good evening to you and all the members of the Western Credit Union, all other persons who are joining the webinar. Again, my name is Colin Ramsey. It is a pleasure to be here on this second day of this webinar, which is really geared toward providing you, the participants, with basic knowledge in taxation that would help you address your affairs from a tax perspective. Yesterday, by way of recap, we spent some time looking at income tax for sole traders. And we highlighted the importance of paying taxes on time and how you calculate those taxes for a sole trader type arrangement. And just by way of recap, we did highlight that for a sole trader, you pay income tax on a quarterly basis. And the quarters, the periods ending 31st of March, 30th of June, 30th September, and 31st of December, with any balance of tax that is paid by April 30th of the following year. We also touched on situations where you compute your income tax quarterly installments by reference to your prior year's chargeable profit. And if in the current year, your income is lower than your prior year, what you must do in order to avoid overpaying taxes. And just to reiterate, the Income Tax Act provides that in a situation like that, you write to the Board of Inland Revenue requesting a reduction or waiver of quarterly installments, as opposed to unilaterally deciding to pay less tax or no tax for the remaining quarters. We also looked at the reverse scenario, where your chargeable income is more than the prior year. And in that case, we identified that by December 31st, you're required to pay at 80% of the increase in the current year's chargeable income and by extension, tax liability over that of the prior year. Okay. We would have looked at the issue of business levy and how it applies to sole traders. And we would have identified that, generally speaking, an individual who's a sole trader would be subject to the higher of income tax or business levy. And business levy is calculated at the rate of 0.6% on your gross income from your business. We would have made reference to certain exemptions that are applicable to business levy. So in the case of sole traders, an individual is exempt from business levy for the first 3 years from the date of commencement of business. And as we touch base on the corporate side today, we will see how that differs for companies. We also highlighted that business levy does not apply to income which is exempt for corporation tax purposes. Similarly, business levy does not apply where your gross income is less than $360,000 for the year. Okay. In the case of a sole trader, we highlighted the need of paying health surcharge on a quarterly basis. And health surcharge is calculated at the rate of $8.25 per week. On a quarterly basis, it equates to $107.25 per quarter, which, when extrapolated over a 12-month period, equates to $429 per annum. In the case of the sole trader, in computing as chargeable income, we identified that you are allowed to deduct all expenses wholly and exclusively incurred in the production of that income, as well as allowances given under the Act, such as wear and tear allowance, where you acquire assets that are owned and used in the business. And we would have gone through the different rates of wear and tear allowance that are applicable to the various types of assets acquired, as outlined under the 7th schedule of the Income Tax Act. We would have also touched on the VAT obligations of sole traders and highlighted that where your sales or gross income, which from a VAT perspective is referred to as your commercial supplies, exceed $600,000 in a 12-month period, there is an obligation to register for VAT. And you should not wait until you cross that figure, but rather do an assessment as the business progresses to determine if the business will exceed that amount. Now, that $600,000 equates to $50,000 per month. And one of the benefits of registering for VAT is that you are allowed to recover input VAT on tax invoices that you receive for purchases and goods used in the particular period for your business. Now, we also highlighted the fact that from a VAT perspective, where your output VAT exceeds your input VAT, you end up in a VAT payable position, which must be paid by the 25th day of the month following the VAT period. And the VAT period is normally a 2-month period. So, for example, where you are registered for VAT and your VAT period is 1 January 2025 to 28th February 2025, the VAT due date is 25th of March 2025. And we indicated that the penalties for non-compliance would be 8% penalty and interest at 2% per month, which equates to 24% per annum. We touched on employee statutory taxes, so that individuals who are employed in an organization, they are subject to statutory payroll taxes, which are PAYE, health surcharge, and NIS. And PAYE is a form of income tax that is remitted on a monthly basis by the employer, along with health surcharge, which is levied at the rate of $8.25 per week, and national insurance, which is really based on scale rates. We also highlighted that individuals who are employees are allowed to deduct expenses wholly, exclusively, and necessarily incurred in the production of income, with the word necessarily limiting the scope of deductibility in the case of an employee type situation. So that if you compare an employee with a sole trader, you will find that there's greater scope of deductibility of expenses for the sole trader, who is allowed to deduct expenses wholly and exclusively incurred in the production of income, as compared to the employee, where the requirement is that he must deduct expenses wholly, exclusively, and necessarily. So some examples of deductions which employees typically claim include the personal allowance, which all of us who are resident in Trinidad are entitled to, and that is currently $90,000 per annum. 70% of contributions to your national insurance, we indicated, is deductible. However, that amount is capped along with contributions to approved pension plans and deferred annuity plans. And when I say approved, I mean approved by the Board of Inland Revenue. And the cap on those amounts is actually $60,000. There are other allowances that are given to persons under the Act, such as first-time homeowner allowance, tertiary education allowance. And these are allowances that could be claimed and reduce your income tax liability. From an employee perspective, we also indicated if your sole source of income is income from employment, there is no obligation to file individual tax returns in Trinidad and Tobago. However, you may be required to file by the Board of Inland Revenue, or, as I mentioned yesterday, it may make sense to look at your TD4, which is the document you receive from your employer the following year of your year of exercise of employment. And that document is what you use to file your individual tax return. And looking at the TD4, it would be advisable to do a back of the envelope calculation to see if taxes were over-deducted, because you may be entitled to an income tax refund. We would have also touched on property tax and just spoken to the essentials of property tax, looking at the residential application of property tax, which is the form of property tax being pursued by the government currently. And we would have highlighted that generally, for property tax purposes, the assessments to be issued by the Board of Inland Revenue should be done by the end of March, with the taxes due by the end of September. And that since property tax was resumed in 2024, some 14 years after the last time it was collected back in 2009, the timeline for issuing assessment notices and paying the property tax were extended specific to 2024. We will see if a similar type approach will be taken in 2025. However, time will tell. Now, I am going to pull up my screen and share my presentation for today, where we will focus on corporation tax as the main topic for today. And you could just let me know once my screen is showing. Let's make sure.
I am able to see the screen, Colin. I am hoping that everyone else can as well.
Fantastic. But before I get into the corporation tax, I just wanted to touch on a couple of very good questions that were raised yesterday. And as Mark mentioned, after the recap, we would want to address these particular questions. So I believe one question that was asked is if a son and a retired mother are employees of the business, would contributions be required for health surcharge and NIS purposes? And in covering the health surcharge, we would have indicated that health surcharge applies to individuals who are over the age of 16 and up to 60 years old. So basically, once you cross 60, there's no need to contribute to health surcharge. NIS, we would have indicated, is based on scaled rates, depending on the income levels of the person, and that the employer contributes 2 times that of the employee. Once the individual hits retirement, contributions are required by the employer only under Class C. So that is just to address that specific question. Yesterday, I know we would have touched on some answers pertaining to that. And I figured before we get into today's session, we could just close the loop on that one. There was also another question about if you are a sole trader and you employ individuals, how do you go about accounting for health surcharge and NIS for your employees? Well, having done further research into the matter, I was advised that the individual sole trader, do have the ability to get a PAYE employer account number and the health surcharge employer account number assigned to you. You may also apply for an NIS employer number under which you may report the NIS contributions for your employees. Okay. And then lastly, there was a question raised on split sources of income. In other words, if I work for a company as an employee and I also generate income from a trade or business, how do I account for my quarterly taxes or my income tax obligations? So just to address that last question, we did indicate that for the employer-employee arrangement, PAYE health surcharge NIS would be dealt with by your employer, who has the responsibility for accounting for the payroll taxes. Unlike the sole trader arrangement, where the responsibility falls on you, the sole trader, to account for your taxes on a quarterly basis. Now, a couple of things I want to touch on the business levy aspect and then the quarterly aspect. The Income Tax Act, and we would have actually covered this on a slide yesterday, indicates that where the emolument income, which is really your income from employment, exceeds 75% of your total income, then business levy is not required. So as far as the business levy reporting is concerned, you need to do a calculation to see what proportion of your income from employment represents your total income generated, inclusive of your income from your trade or business. And if that figure is over 75%, then there is no business levy reporting requirement. Furthermore, under the Income Tax Act, I did mention for your self-employed income, you pay on a quarterly basis. Now, in accordance with Section 79(6) of the Income Tax Act, where more than 3/4 of your total income is emolument income, which is income from employment, as I mentioned, then you're only required to account for balance of taxes by April 30th of the following year. In other words, there's no requirement to pay quarterly installments of income tax in a scenario like that. So that is really to bring clarity and closure to the questions, the very good questions that were asked yesterday. And I would like to encourage the viewers and participants to please continue with the questions, as the benefit from these sessions are really from those questions and getting the answers to those questions. So jumping into today's agenda, we're going to start with cooperation. Sorry, hi.
Can I just jump in quickly and have you answer one question very quickly from Vanessa Brown-Paul? And Vanessa is asking, of course, salutations, good afternoon. Can a 2018 income tax return still be filed, or is there a cutoff period?
That's an excellent question, Vanessa. And let me start by reiterating something that I would have touched on yesterday to address this question. So the statute of limitations in tax, and just generally speaking, the statute of limitations is the period of time that the Board of Inland Revenue could raise an assessment against you, the taxpayer. Is actually 6 years from the end of the year of income, or 3 years from the date you file your tax return, whichever is later. Now, as you could tell, the requirement gives you the latter of the two periods, so that if you never file the tax return, then the 3-year period remains the latter of the two periods. In practice, the system of the Board of Inland Revenue, as far as we understand, is so organized to only process tax returns for the last 6 years of income. So if we were to go back and count 6 years from 2025, we will end up at 2019 income year. So generally speaking, we refer in the tax world to 2019 go forward as open years of income, meaning income years where the Board of Inland Revenue could audit you and assess you to additional tax, or you are allowed to file a return. It is a bit unfortunate that the system is so arranged at the Board of Inland Revenue because, as I mentioned, a strict and literal interpretation of the law would lead one to conclude that the latter of the two periods, 6 years from the end of the year of income or 3 years from the date I file my return, would mean if I never file a return, I should still be allowed to, because that 3-year latter period should prevail. So I hope that question was addressed sufficiently, Vanessa.
Thank you very much, Colin.
No problem. So kicking off into the agenda, we're going to just cover corporation tax and the obligations for small to medium-sized entities. And, during the session, I will be making comparisons between what we covered yesterday by way of income tax reporting for self-employed individuals. Again, we're going to touch on business levy, which we spent a lot of time on yesterday, and you will see how similar it works for companies with 1 or 2 nuances, which I think would be very important to note. We also introduced green fund levy, which we specifically did not mention yesterday. And the reason we did not mention green fund levy yesterday is because green fund levy does not apply to individuals. It applies to partnerships and companies. We will also touch on the importance of bookkeeping and retention of records, at which time we will invite our colleagues, Jared and Fenella, to jump in and give us their professional input on, managing books and records and the accounting side, which I myself am very excited to look forward to, to hear more about that side. And then we're going to touch on VAT, similar to what we did yesterday, the obligations to register for VAT and the consequences of registering for VAT, the importance of compliance and so forth. Because companies are now, have always been required to file annual returns in Trinidad, and given the recent updates to the Companies Act, and by extension, the process of filing annual returns, we thought it prudent to use the opportunity to touch at a high level on these updated filing requirements from an annual return perspective. And then we will close off today with some little tips and tricks for you on tax saving opportunities. So you don't want to leave before that one. So I think we have you locked in for the next 2 hours or so. And at the end, we will just give, a few allowances that you could benefit from to help manage your corporation tax liability where you're an SME. Again, I just want to touch on 2 things before we get into the session. On the left-hand side, we have what is called a limitation, which is really meant to say that, look, what we are going to discuss here is aimed, and the purpose of it is to arm you with the knowledge of handling your tax affairs on your own. It is not really meant to make you an expert in taxes, but to give you the general awareness and basic knowledge to go about dealing with your tax affairs and demystify any concerns you may have from a tax standpoint. I think a big part of, persons being hesitant to address taxes is a lack of information. So the purpose of the session is really geared toward dealing with that. The other point I want to make is really something that I mentioned yesterday, which is that, given the state of the economy of Trinidad and Tobago, I think a lot more focus going forward will be placed on compliance and collection of taxes. So it is incumbent on all of us as citizens of Trinidad and Tobago to do our part and account for our taxes when due. I would say that there may be, due to resourcing constraints, a lack of enforcement, which may be a contributing factor to why there's a certain level of tax leakage in the economy. But going forward, with the government looking at converting the existing Board of Inland Revenue to a Trinidad and Tobago Revenue Authority, there may be more focus and emphasis placed on compliance and enforcement. So again, I encourage you all to take away the learning points from today's sessions and apply it in your own personal circumstances and businesses that you have currently. Okay, so what is corporation tax? Well, corporation tax is a tax that is levied on a yearly basis on the chargeable profits arising in that year. And chargeable profits generally are defined as your income from the various sources under the Act, less exemptions from tax, less deductions and allowances. So you would recall yesterday that for an individual who's a sole trader, you are allowed to deduct expenses wholly and exclusively incurred in the production of income. And as you could see in item 2 of my screen, that is reiterated here for companies. And just to make the point that, a lot of what we covered yesterday, guys, you will realize would be repeated today, because generally the Corporation Tax Act via Section 19 incorporates several provisions of the Income Tax Act. And so there are a lot of similarities between the Income Tax Act and corporation tax in its application. So from a tax perspective, you will realize that the tax rates for companies are generally 30%. However, there are special rates for companies that are listed on the SME exchange. And in a case like that, those companies who are so listed benefit from no tax for the first 5 years, actually, and 50% of the standard rate of corporation tax for the next 5 years. So, in essence, that is something for those companies, those of you who have SMEs who in the future may be looking at or considering listing on the SME. There are certainly concessions you could benefit from. Now, I want to spend some time on item 3, the quarterly tax reporting, which we would have covered yesterday, but this is very, very important, and I'll tell you why. What we have seen happening is where companies do not account for their quarterly taxes on a timely or accurate basis, they assess interest, and the interest is levied at 20% per annum. Now, this interest is reflected on a notice of assessment, and that notice of assessment is issued by the Board of Inland Revenue after processing your tax return. So, similar to a self-employed person, a company determines its quarterly installments by reference to its prior year's chargeable profits. So basically, you take your prior year's chargeable profits, multiply that by the current year's tax rate, divided by 4, and that gives you what you are required to pay by way of quarterly installments of corporation tax. Now, similar to the self-employed person, where your chargeable profits are lower than your prior year, you should not unilaterally pay less tax. You should rather write to the Board of Inland Revenue requesting a reduction in quarterly installments or a waiver, as the case may be. Similarly, if your chargeable profits exceed that of the prior year, the law requires you to account for 80% of the increase in the current year's chargeable profit over the prior year and the resulting tax liability by December 31st, with any balance of tax paid by April 30th of the following year of income. So basically, in the increased scenario, you would have paid the sum of your prior year's tax liability plus this 80% increase. Whereas conversely, where your profits will be lower, you request a reduction in chargeable profits from the Board of Inland Revenue. And I would also make the point that business levy also needs to be considered in the case of companies. And business levy, as we would have discussed yesterday, is a minimum tax that is imposed on the gross receipts, gross sales or receipts, so your top line of the company, and it is levied at a rate of 0.6%. Now, it is interesting to point out that for a company, business levy does not apply for the first 36 months or 3 years from the date of incorporation or registration. Now, if you contrast that to the individual scenario, you would remember yesterday we mentioned that business levy should not apply for the first 3 years after commencement of business. So you see, there is a difference between the application of business levy for a sole trader versus that of a company. For a sole trader, the exemption period is 3 years from the date of commencement of business, whilst for a company, the exemption period is 3 years from the date of incorporation/registration in Trinidad. I would also make the point that business levy, similar to the individual sole trader scenario, does not apply to income which is exempt for corporation tax purposes under the Corporation Tax Act or any other law, as the case may be. Business levy also does not apply where your gross receipts do not exceed $360,000 in the preceding year of income and is not expected to increase that threshold in the current year of income. Okay? Practically, what we have seen is the system of the Board of Inland Revenue really applies the business levy exemption where the gross sales are less than that $360,000 in the current year of income. So if you file your tax return using the e-tax platform, which is really the only way to file tax returns in Trinidad and Tobago currently, you will note that the system provides for that limit in computing business levy. So Green Fund Levy now is actually a miscellaneous tax that is imposed under the Miscellaneous Taxes Act. And Green Fund Levy is an environmental levy, so the funds collected from the Green Fund Levy are actually intended to be applied toward the environment and improving, different environmentally friendly and related projects. Green Fund Levy is imposed at the rate of 0.3% on the gross sales or receipts of the company. Okay? Now, a few points to note from a differentiation between the business levy and the Green Fund Levy. The first point is Green Fund Levy has no exemption period, so it is applicable from day one. So whereas business levy, you have this 3-year exemption, Green Fund Levy, there is no such exemption period. In addition to which, Green Fund Levy applies on all income, whether exempt from tax or not. So, whereas business levy, you would exclude exempt income, Green Fund Levy applies on all income, including exempt income. And just to reiterate that both business levy and Green Fund Levy, similar to corporation tax, are accounted for on a quarterly basis, with the quarters ending 31st of March, 30th of June, 30th of September, and 31st of December. Okay? So when you account for your quarterly taxes, you then file your corporation tax return, similar to what we would have covered yesterday in filing your individual tax return for the sole trader. And as I mentioned, the provisions are quite similar under the Income Tax Act in the case of the corporation tax. So a corporation tax return for a year of income is actually due for filing with the Board of Inland Revenue by 30th of April of the year following the income year in question. So, for example, the tax return for income year 2024 is actually due for filing with the Board of Inland Revenue by 30th of April 2025. Now, there is an automatic 6-month extension to 31st of October, wherein the tax return could be filed, right? Now, if you fail to file the tax return by 31st of October, then the consequence is a late filing penalty of $1,000 TT for every 6-month period or part thereof the tax return remains outstanding. Now, just to repeat from yesterday's session, where you filed your individual tax return late, the penalty was actually $100 TT for every 6-month period or part thereof your tax return remains outstanding. So for individuals, the penalty is $100 for 6 months, every 6-month period, post the 31st of October tax filing deadline. For companies, that amount is $1,000 for every 6-month period. Just a point to note on that. Okay? So, of course, we have the record keeping, which, again, we cannot reiterate enough the importance of retention of books and records. And under the laws of Trinidad and Tobago, there is a requirement to retain books and records in Trinidad and Tobago in TT dollars for a period of 6 years from the end of the year of income, or 3 years from the date your tax return is filed, whichever is later. And of course, that period coincides with the statute of limitations that I would have mentioned previously. We will touch a bit later on the retention of books and records, and we will also share with you the provision of the Income Tax Act, which is incorporated in the Corporation Tax Act, that levies this requirement to retain books and records for this defined period of time. So I'm going to just touch high level again on this slide, which basically covers everything which I would have said it before, showing the comparison between business levy and Green Fund Levy. Starting with the bottom of the slide, just to reiterate that both levies are dealt with on a quarterly basis, with the quarters ending 31st March, 30th June, 30th September, and 31st December, with any balance of business levy or Green Fund Levy to be remitted to the Board of Inland Revenue by the 30th of April of the following year. And the business levy does not apply within the first 3 years of incorporation, whereas Green Fund Levy applies from day one. The rate for business levy is 0.6%, which is levied on your gross sales or receipts whereas the rate for green fund levy is 0.3%, similarly levied on your gross sales or receipts. The minimum threshold for business levies, of course, is $360,000 in gross income for the preceding year and the current year. Green fund levy, there is really no minimum exemption period, as I would have mentioned. I also want to reiterate that, for a company, you are required to pay the higher of the corporation tax or business levy, so that if you account for business levy payment, but end up in a corporation tax position, the business levy payment is creditable in computing your corporation tax final liability. And vice versa, if you end up in a business levy position but would have paid corporation tax quarterly installments, then the corporation tax quarterlies could be offset against the business levy liability due for the year of income. I would mention that these offsets that we are mentioning is in respect of the same year of income. In other words, the practice currently is not to take a payment of 1 year of income and apply it to a liability of another year. Okay? We would also want to highlight that where you have a company that may be behind on its tax reporting obligations or tax filing obligations, there is currently a tax amnesty in Trinidad and Tobago. And this tax amnesty runs to 31st of March 2025. The tax amnesty covers a wide array of taxes, ranging from income tax, corporation tax, value-added tax, withholding tax, a lot of various taxes, health surcharge and national insurance and so forth. But it covers up to income year 2023 and prior. It does not cover income years 2024 going forward. So I would encourage you to, use the remaining period for the amnesty, which is not very long, and, take action where any pending taxes are due to be remitted or any tax returns are due to be filed, thereby benefiting from a full waiver of late filing penalties and late payment interest. Now, practically, I will make a point that for those of you who have taken advantage of the amnesty, there is something to note with regard to the board's issuance of notices during the amnesty period. So, if you file tax returns and your notices of assessment have been issued, what we've observed is that these notices of assessment reflect late filing penalties and late payment interest, even though the amnesty should waive these things automatically. It is my understanding that this is a system issue with the Board of Inland Revenue. However, I would encourage those of you who may have received those notices to consider submitting a letter to the Board of Inland Revenue, just outlining the fact that these returns and payments were done within the amnesty, and therefore you request their confirmation, their written confirmation, that the penalties and interest would be waived under the amnesty. I will say that ought to be the case because the legislation allows for it, irrespective of any system shortfalls at the Board of Inland Revenue. However, just for protecting your own personal interests, the letter to the board is recommended. The other point I would like to make is you will observe when you write to the Board of Inland Revenue, not on all occasions you receive a response. So, for example, I did mention on the quarterly corporation tax reporting, where your chargeable profits are lower than the preceding year, you should write to the board requesting a reduction in quarterly installments. When you write to the board requesting such reduction, it has been our experience that the board does not respond to your letter. But it is good to have the letter on file to show that you acted in accordance with the law, which requires you to submit this letter. And that's why I'm saying, similarly, if you get any notices that seem, awry or not in line with what we've just discussed, taking into consideration the tax amnesty and so forth, you should consider writing to the board on that issue. So we're just gonna, touch on. Hi, Mark.
Before we go into the other section,
Yes.
I would like to field some questions. There are some questions in the chat and in the Q&A section. So I'm now going to invite Aaron to read some of those questions to you.
Hi, of course. We have a question from Ms. Durant.
Aaron, could you speak up a bit, please? I can hardly hear you.
Can you hear me better now?
A little.
Yes, a little better now.
A little better now. Okay. Much better now?
Yeah, well, I'm hearing you, Aaron, so I guess you could.
You hear me much better now?
Oh, that's good.
Yeah, that is yeah.
All right, so we have a question from Ms. Durant. On the Inland Revenue website, lists a number of records that a sole trader is required to, such as sales books, purchasing books, records of expenses, wages and salary books, etc. Does this have to be physical books or Excel records?
And that is an excellent question again. So in response to that question from Ms. Durant, the current form of the tax legislation does not really prescribe the electronic retention of books and records. Albeit in practice, we know in this age of technology that is what we see happening. We have systems that generate invoices and store and save, and we have artificial intelligence, robotics, different forms of technology that help us be more efficient in the way we run business. My response to that is, under the Act, the requirement is to retain the books and records. You should have, if you don't have it hard copy and it's stored on a system, you should be allowed or have the ability to print hard copies if and when requested by the Board of Inland Revenue in an audit. And as you could see on my screen, this is how the law is actually worded as far as the retention of books and records. And nowhere in this excerpt from the Income Tax Act is there any reference to electronic retention of books and records. So just to read for everyone's awareness, every person engaged in any trade, business, or profession, and every person who is required by or pursuant to this act to deduct or withhold and to pay taxes or other amounts shall keep in the English language and in the currency of Trinidad and Tobago proper records and books of account, including annual inventory, at his place of business or residence in Trinidad and Tobago, or at such other place as may be approved by the board, and in such form as required by the board. And that part is important, if I may reiterate that point, and in such form as required by the board, and containing such information as in the opinion of the board will enable the taxes payable under this act for the taxes or other amounts that should have been deducted, withheld, or paid to be determined. Now, as I mentioned, the retention period is 6 years from the end of the year of income, or 3 years from the date the tax return was filed, whichever is later. So generally, just before we take any more questions, I just want to make one practical point before I forget. Since the advent of COVID, unfortunately, hitting the world, we have seen the board shift from the traditional audit approach of going to taxpayers' businesses and requesting hard copy files to a more virtual approach to audits. So they may actually, we have seen coming out of that COVID period, emails being sent to taxpayers notifying them that they've been selected for audit and identifying the list of documents to produce, and even encouraging the exchange of documentation electronically in the form of emails or flash drives or CDs, as the case may be. So it would suggest that the board themselves are moving away from hard copy documents in every audit to a more virtual form or soft copy form of supports. Now, it doesn't mean to say that they are not empowered to request hard copy files. They certainly are. And if they have any doubts or concerns, they may request an original wet signed, a wet signature copy of a contract or agreement, as the case may be. So I hope that addresses Ms. Durant's question.
Thank you, Mr. Ramsey. And we have another question from an anonymous attendee, but I'm seeing it again here, so I know it's Miss Charlotte. And she states that her business was registered as a limited liability company in April 2024. She asks, what are the required taxes and documents for her to file, and when does she need to submit OP? Thank you.
Excellent question. So, Ms. Charlotte's business started April 2024. And we would have mentioned, for business levy purposes, there is a 3-year exemption from the date of incorporation or registration. So I'm not sure when the business was incorporated or registered and whether that date aligns to the date the business started or so. But assuming that that date is April 2024, you would be exempt from business levy for 3 years, which will take you to April 2027. So there would be no business levy reporting requirement. The other thing I would say is, because in this case, there is no prior year chargeable profit to refer to as a basis to compute the quarterly installments of corporation tax, then you will use your current year's best estimate of your chargeable profit for the purpose of remitting quarterly installments due. Now, for the current year, once you pay at least 80% of the tax liability for the current year by 31st of December, then you ought not to be charged interest for any short payments of quarterly installments due. In other words, for your first year, you should pay by December 31st 80% of your tax liability for 2024. There is a point I would like to make. It is a bit of a technical issue, but it is very, very important to note at this point. Under the Corporation Tax Act, well, the Income Tax Act as incorporated in the Corporation Tax Act, a taxpayer may choose a year-end or what is referred to an established accounting terminal date that is different from the tax year of income. And the tax year of income is defined as a 12-month period commencing January 1. So in other words, the calendar year. Most taxpayers you may see filing tax returns for that calendar year period, 1 January to 31st December. But there are instances where your year-end may not align to that. And you do have the right to choose your established accounting terminal date. So, for example, Miss Charlotte's business started, and let's assume was incorporated April 2024. She may choose to have a year end of March 31st, 2025. April to March is a 12-month period, and just to make the point that a taxpayer files a tax return for a 12-month period, a 12-month basis period, except in the year of commencement or in the year of cessation. Other than that, the expectation under law is your tax return is filed based on your counting period for 12 months. Okay? So in the year of commencement, which would apply in this case, if her year end runs April to September 2024, then she will file a short period of account, or December 2024, an equally short period of account. But if she runs to March 2025, then that would be a 12-month period, April to March 2025, which means her first tax return would be for income year 2025. Because her first year of income actually results in a year end that falls in the tax year 2025. Okay? So that is just a point to note. I know there would be a lot of questions because for those financial year ends that are at variance from the calendar year, there are a lot of questions around quarterly reporting of taxes, how it matches with business levy and green fund levy, which, by the way, is always on a calendar year basis. So that is one thing that does not change. Business levy and green fund levy, they are always on calendar year gross receipts. March 31st, January to March, April to June, July to September, October to December. But for corporation tax purposes, and by the way, the same applies to the sole trader scenario as well. If you want to choose a year end other than December 31st, it is quite possible to do so under the Act, right? So, as I mentioned, the year end could be at variance, and the corporation tax will be dealt with accordingly.
Thank you.
You're welcome.
We have another question. Well, we have a good few questions, but I'm not sure if we'll be able to squeeze in everything. So I'll just take one more, and I don't know if Mr. Fred would like to put in some interesting one, because I see a long, interesting one there. So we have a question from Miss M. Alexander. She asks if there is a significant difference between SME and sole trader where it pertains to business levy and green fund.
Yeah, there are some fundamental differences. I mean, the term SME, small to medium-sized entities, there are certain gross income thresholds, number of employees, assets owned that would categorize you in this SME type category, right? In the case of a sole trader, and just also make the point that there are also micro enterprises, and this session is really meant to address all companies. But in keeping with the discussions I had with Mark, in planning the session, we felt that many of the members of Western Credit Union may be business owners that fall within those categories, micro enterprises, SMEs, and so forth. And so the emphasis and focus will be toward that particular group of companies. But what I'm speaking to here is not just applicable to SMEs or micro enterprises. It actually applies to medium-sized and large enterprises as well. Okay? So just to go back to the question of Ms. Alexander, the tax reporting would be similar, as you could tell. For a sole trader or an SME, you pay taxes on a quarterly basis. You pay the higher of income tax or business levy. In the case of a company, corporation tax or business levy. You have similar exemption periods. Bearing in mind that for individuals, the exemption period is from the time of commencement of business, whereas for companies, it's from the time of incorporation. And the other point that I will make is that Green Fund Levy, which you also mentioned, does not apply to the sole trader. It applies only to the company. So if you have a SME that is a company, then Green Fund Levy would need to be accounted for on the gross income at the rate of 0.3%. So I hope that addresses the question, Ms. Alexander.
Colin, I just want to address two questions very briefly. It is now 7:12, and we are not even halfway into the presentation as yet. But I am gathering that, of course, the questions and answers would also form or draw some of the information from the presentation out in the discussion as well. So we have here Ms. Carla Ash, and she is asking, she says, good evening. Can you please talk about tax liabilities for NGOs and non-profit organization? Does business levy and green fund apply? What about NIS health surcharge? What about volunteer staff? Is NIS and health surcharge due?
Yeah, there are a lot of questions there.
Yes.
Good and very good questions, I might add, right? So let's start with the NGO side of things. So under the Corporation Tax Act, Section 61G provides that the profits of any ecclesiastical or charitable institution are exempt from tax, insofar as that charity is approved by the president. So under the existing regime, there is a process for an NGO to be listed as an approved charitable organization and thereby obtain this tax exempt status. And there's also a requirement that the income generated from the NGO is really not from a trade or business, because if you would recall, when we went through the sources of income yesterday, we did identify one of the taxable sources of income as income from a trade or business. Now, once you are an approved NGO and have obtained tax exempt status, then I would have mentioned business levy does not apply to income which is exempt for corporation tax purposes. So if the NGO is approved and the profits of that NGO are exempt for corporation tax purposes, then by extension, the gross income should not be subject to business levy, because business levy does not apply to income which is exempt for corporation tax purposes. Green Fund Levy, however, applies to all income, whether exempt or not. So I will say that the NGO would be subject to Green Fund Levy on the amounts collected and received. So I hope that addresses the first part of the question. As far as health surcharge and NIS reporting is concerned, I am not aware of any provision in the Act that relieves an employer of their obligation to account for statutory payroll taxes where they fall under any specialized approval, such as the approved charitable organization, etc. Certainly, once the employment relationship is created and a contract of employment is entered into, thereby leading to the employee receiving his or her remuneration from the employer, there would be an expectation for statutory payroll taxes being PAYE, health surcharge, and NIS to be accounted for. For volunteer staff, it really depends. I mean, I don't know off the top of my head what would a volunteer staff really, look like in terms of what remuneration entitlement is given. When I hear the word volunteer, I think of giving of your time without any remuneration in return. And so it suggests to me if there's no income in return for my voluntary work, then there's no reporting required for PAYE, health surcharge, and NIS. But again, it needs to be looked at in the context of if there is any type of written agreement for the particular workers and whether remuneration in any form is given that may constitute emolument income subject to tax.
Thank you very much, Colin. Thank you very much, Aaron, and we will now get back into the presentation.
No problem. So that was a very good round of questions. Thank you to all the participants, and hopefully we'll have time to address some other further questions. So mindful of the time, I think we next had on our agenda the VAT reporting, but I don't know if at this time, Mark, it would make sense to invite Fenella and Jared, as we are on the whole issue of bookkeeping, retention of records, accounting, whether now would be an appropriate time to invite our colleagues to speak a bit on the accounting side, or whether you wanted that to be after we wrap up the tax or at this juncture.
So, ladies and gentlemen, I would now present to you Ms. Fenella K. Sam, our accountant, and Mr. Jared Matthews, our assisting accountant, to speak about, excuse me, proper bookkeeping and its importance. Fenella, Jared, the floor is yours.
So good evening, everyone. My name is Fenella Sam, as Mr. Farad have mentioned. I'm so happy to be here with you guys to partake in such a needed and important discussion on entrepreneurs and their taxation. So, today we've been throwing around the word bookkeeping. What exactly is bookkeeping? So bookkeeping refers to the systematic process of recording and organizing your business financial transactions, right? So today I just want to dive into a little bit more about why it is important for you to be bookkeeping as a business, right? So bookkeeping is crucial for your business as it ensures you have accurate financial records. It facilitates tax compliance, and it enables informed decision-making by providing insight to your expenses, your income, your assets, and your liabilities. So just with that information there, that can tell you that how important it is for you to be keeping records of your business financial transactions, right? So I'm just going to give you a few more points as to why bookkeeping is important. Bookkeeping provides a foundation for creating accurate financial statements, such as your income statement, your balance sheet, your cash flow statement, which is essential for understanding a business financial health. And as I would have mentioned in previous webinars before, knowing where your business financial health is at will determine how you can take steps to get from where you are to where you would like to be financially, right? So another importance of bookkeeping is that it helps you to track your income and expenses. Because I know Colin, you and Risa probably would have experienced this, where, entrepreneurs come to your desk and they have no records at all. They don't know where their money is coming from and they don't know where it's going. So this is important for us to be able to identify where money is coming from and where it is going. So another point is that it also helps you to identify trends and patterns in your business. So by analyzing historical data, your business can identify trends and patterns in their financial performances, which can help you make better decisions. All right. So when you have your accurate bookkeeping, you're seeing, okay, this may be working against my business, or this may be working for my business. Now you are able to make better decision when it comes to your financial choices, your investments, etc. So that is all I would be saying today. I'm going to take a back seat and I'm going to allow our accounting assistant to present to you our bookkeeping spreadsheet, because WESCU is such a caring organization and we're so focused on the holistic development of our membership that we saw a need.
Yeah.
We saw a need in our entrepreneurs, especially when they're coming to us for loans, etc. We saw that they don't have proper bookkeeping. So we've decided that we're going to create a tool to assist our members in taking one step further in having their bookkeeping accurately recorded, so that when they come to us, they are presenting us with accurate financial reporting. So without further ado, I'm going to hand you over to Mr. Jared Matthews, our accounting assistant, so he could present our bookkeeping spreadsheet for you guys today.
Hi, good night, everyone. Once again, I'd like to thank you for your time, for joining us on this wonderful meeting. So I'll just be shortly sharing my screen so just be able to see the web sheet. Now, this web sheet is available for all our members of the credit union, and we also offer personalized experience as well as assistance in helping our members going through this process. So I'll start sharing my screen here. All right. Okay, so if everybody is seeing it properly.
I am seeing it, so I'm hoping that everyone is seeing it as well.
All right.
I'm seeing some thumbs up.
Wonderful. Yeah. All right, so as we begin, this is a spreadsheet that we have for entrepreneurial members. We're able to help them, guide them through their full process of their bookkeeping guide. So you'll start up with the WESCU welcome screen, as well as a guide. That will help us see how to be able to use your inputs to be able to help with your bookkeeping and records. Right, so we will have the income categories or expense categories. I'm just speeding through here just for the purpose of time. I'm just speeding through here. So the multiple categories we will have available here, as well as it's fully customizable. So we allow them to have their multiple categories to be able to add in the types of incomes as well as the type of expenses, whether it be the recurring expenses or your fixed expenses like your rent, mortgage, utilities, your variable expenses that would change on a month-to-month basis, such as your groceries, as well as your dining out and regular entertainment expenses, as well as personal loan expenses or debt expenses that you would personally incur. The spreadsheet will come with a cash flow projection that would be on a month-to-month basis as well as a year-to-date basis to help with the granting of loans, as well as just financial tracking of your organization to be able to track your monthly incomes as well as your operating expenses that you will have on a month-to-month basis. That's fully customizable. It also comes intact with the income statements that to help provide a better flow of the cash flow that your company will be generating on a month-to-month as well as a year-to-year. That tracks your revenue, your cost of goods, as well as the multiple and various expenses that you would have as a personal. Now, this is available for both companies, entrepreneurs, as well as those who are just trying to keep track of their own personal expenses. So it is not just for the businesses, it's just for those who just want to help with their budgeting, as well as benefit more on a more personalized tracking of their expenses on a day-to-day basis. All right, so I'll just do a quick example here. This would be like the expense tracker. So we'll be able to track our monthly expenses. Let me say for the month of February that would have passed. You would have went out on Valentine's Day, and you would have taken out your significant other on Valentine's Day. You would have gone out to a fancy restaurant, and you would have decided to budget. You decided to budget on dining out. You wanted to take out your significant other anniversary date, special day. You wanted to take them out and show them a good time. So we'll be able to see this here now. For our expenses, we went into the February period here. we were able to see that the expenses were automatically generated into our system. Now, on a month-to-month basis, they do have inputs for your budgeted income that you expect to generate, as well as multiple streams of the income that you will have here, as well as compared to the actual that you will have generated as well. This will be the section here for your monthly fixed bills, or your monthly fixed expenses, as well as your variable expenses here. It comes fully intact with executive summary, which would show a full, more detailed and more appreciative approach for the expenses on the spreadsheet, as well as graphing it out that you'll be able to show to a loans officer or even just to a person for yourself to be able to see how expenses are tracked. All right. And going back here, sorry. Yeah. And as you go back into the cash flow, you'll be able to see these expenses are automatically mapped out onto your account to be able to have a better approach of how it was applied. Now, the document here, you'll be able to go into a loans officer or we'll be able to go into a loans officer to be able to approach them, especially for the entrepreneurs. If you have your bag of receipts, to be able to keep track of all your monthly expenses, your day-to-day, your overhead, as well as be able to get granted a loan, as well just keep track of your own monthly expenses. All right. Now, it's a lot of information. This is a service that we do provide on a personalized experience for all the members of Western United Credit Union. So at any point in time, you are interested in this, you always feel free to join the credit union, as well as reach out to me, myself, or to my colleague, Ms. Sam, and we'll be able to walk you through the process as well as guide you on a more efficient way of taking track of your taxes. So without further ado, I'd like to hand you back over to our guest, Mr. Colin Ramsey, as well as Mr. Say Young, to continue the presentation, as well as continue such an informative night that we're having here tonight. Right.
Thank you very much, Jared, and thank you very much, Vanilla. Before we hand back to Colin and Risa, I just want to say to our members who are here and also to our potential members who are here that I saw someone ask if the entrepreneurial spreadsheet, if it is available for use. The simple answer, the short answer is yes, it is available for use for our members. And one of the things we believe very passionately, and we are very intentional at WestQ, that you must have a spending plan. You must ensure that when you come to sit to have a conversation with us, what we ask of you is that you be prepared to be financially vulnerable with us. And what do we mean by that? You know that some persons come to the loan officers. They come to Fanella or Andrew, even myself, and they don't want to be honest. If your desire is to be financially stable, it means that you must change your mindset. It means that you must apply to the four, to the four elements of human endowment. And what does that mean? It means that you must be self-aware of who you are as an individual. And being self-aware of who you are as an individual also helps you with your spending, because you are honest. You would be able to say, all right, I'm a yes person. Oh my God, everybody that comes and they ask for money, borrow, I just give in. I know they're not going to pay back, but it is affecting me. Yeah? Sometimes I take my mortgage or my rent money and I lend it, thinking that it will be repaid to me on time, and then I am left in the rain. So we need to be honest with ourselves. And what do we need to change? We need to be conscious. We need to have a self-independence, and we also have to be creative. As Andrew would have said, that is another discussion because it will take up a lengthy time. But I just want to say to individuals, if you desire a sustainable financial position, you must be vulnerable. Vulnerability simply means that we must be honest with ourselves first. And secondly, when you sit with Fanilla or Andre or either one of the credit officers, Sonia or Aaron, you are sitting there dealing with professionals that truly wants to help you, not to look down on you or criticize you. And if you want to come out of your financial rut, you have to be vulnerable, be honest. Because some people, a $4,000 Valentine's Day dinner, wow. And we go out and we spend it. So we are entrepreneurs. We may be a young entrepreneur, or we may be a mature enough entrepreneur. But the fact is, we have to ask ourselves, can we afford it? And sometimes we spend monies, be it personally or in a business, to impress others. We lie on our money. So poor money lying, oh gosh, I can't make it. I can't make it. You're overspending. But no, I want to impress my family. I'm a prudent and shrewd business person. So I could spend on everybody. And at the end of the day, when you go behind the scenes, or sometimes right there the dinner, and it was, oh my God, you're saying in yourself, look at this bill. How am I going to pay for it? I may be able to pay for it now, but how am I going to pay for it from month to month going down the road? So we at Westview, we are very intentional about helping persons reposition themselves and reposition their thinking as it pertains to their financial position. We are not only about the dollars and cents, but if we want to improve our holistic sustainability, our holistic profitability, we must sit and we must be honest with the persons who are here to help you. With that being said, Colin, the floor is yours.
Well, thank you so much for those kind words, Mark. And I should probably book a session with you for that self-awareness, because I find myself in situations where I very often lend helping hands to people who may not always return the favor when the time is due, right? So
and that is no
that's the
problem.
first
So,
step.
I will give you some tips on how to handle that situation.
Right. I look forward to that. I look forward to that. Because there's no shortage of requests, it would seem, especially now, more so than before. So so thanks for that. And I also want to thank, Fenella and Jared for that excellent presentation. I mean, I certainly think that spreadsheet is very useful to help entrepreneurs manage their affairs. I saw the income statement, which is exactly what is needed for filing your tax returns on an individual basis, on a corporate basis. Just to make the note that, or make a point rather, that if you did incur, and I'm just saying, a $4,000 Valentine bill, not all of that is deductible for tax purposes. I'll just give you a pointer that there is a restriction on meals and entertainment. only
Yes.
75% of it is deductible. So just bear that in mind. Don't put it in your P&L and feel like you're gonna walk away with 100 cents on the dollar as a deduction. Be guided accordingly, right? All right. So we're gonna get back into the presentation and just touch on value-added tax. And a lot of this we would have covered yesterday, but we're going to reiterate it, especially for the benefit of those who may have been unable to attend yesterday's session. And I think it's never too, you can never hear too much in tax in terms of repeating some of these things, right? So, as I mentioned, from a VAT standpoint, a company or sole trader is required to register for VAT where their commercial supplies are expected to exceed the threshold of $600,000 in a 12-month period. And once you're VAT registered, you have to charge VAT on your output supplies, and you will be allowed to recover input VAT on your supplies received. The VAT Act is very prescriptive in terms of how you issue tax invoices. The Section 36 of the Act outlines, I think we may have, right, so we'll come to the issuance of tax invoices on the next page. But suffice it to say that there are different types of services, goods services, from a VAT perspective, which you all should be aware of. And under the VAT Act, there is what we call standard rated commercial supplies, which attract VAT at the standard rate of 12.5%. There is zero rated goods and services, which are outlined in Schedule 2 of the VAT Act, and that covers basic food items, food, pharmaceuticals, exports. It also covers certain types of vehicles, hybrid and, the electric vehicles with certain prescribed, it's very prescriptive, the type of vehicle that qualifies for the zero rate, and then certain items of equipment that are used in the energy sector, for example, are zero rated. So Schedule 2 has that list of all zero rated items, and Schedule 1 covers all the exempt items, and for exempt purposes, financial services are exempt, rental of residential property, real estate brokerage, training and education, bus and taxi services. And there are quite a range of services that are exempt. I would like to make a distinction here between exempt and zero rated. When you make zero rated supplies, it means you still make commercial supplies, which will make you eligible for VAT registration, as opposed to if you make exempt supplies. If you make exempt supplies, there is no basis for VAT registration. And there are also other instances where a supply may fall outside of VAT altogether. So, for example, Schedule 3 of the VAT Act lists matters with respect to commercial supplies, and it specifies that the sale of land or a building or structure attached to land is neither a supply of a good or service, which means it falls outside the scope of VAT altogether. So if you own a property, let's say a building, or you construct a building, which the intent is to sell that building after you construct it, guess what? There is no basis to apply for VAT registration. And all the costs that you incur in constructing that building would not be recoverable for VAT purposes because there's no basis for registration. Now, if you contrast that with constructing that same building to lease for commercial use, the leasing of a building for commercial purposes is a commercial supply for VAT purposes, and there is a basis to register for VAT in that situation. So you would be allowed to recover your input VAT in the construction of that building because you will be generating commercial supplies post the completion of the building in the form of rental of office space for commercial purposes. So you see the difference in the type of activity, which will then determine whether you are eligible for VAT registration and by extension would be able to recover input VAT in these circumstances. So, as I mentioned, when you're issuing VAT invoices, the VAT Act is very prescriptive on how you should issue those invoices. You know, there are very specific items that must be included in the invoice. The VAT registration number of the supplier, an identifying serial number, the date of the invoice, the name of the customer, the value of the supply before VAT, the total value, etc. All of that must be reflected on the invoice. Now, as I mentioned, when you are VAT registered, you report output VAT, which is really the VAT charged on your invoices. But you are also allowed to recover input VAT, which is the purchaser side of the business, from VAT registered suppliers. Where the output VAT charge exceeds the input VAT, you end up in a VAT payable position. And that VAT should be paid to the Board of Inland Revenue as identified in item 5 by the 25th day of the month following the end of the VAT period. And the VAT period is usually a 2-month period. Okay? Now, if the reverse happens, in other words, your input VAT is more than the output VAT that you would have charged, then you end up in a VAT refundable position. And typically, VAT refunds take time to be issued in Trinidad and Tobago. Now, I will probably digress from the slides at this point just to highlight that currently there are VAT bonds that were issued by the government of Trinidad and Tobago to deal with the perennial VAT refund issue that plagues the business community. These VAT bonds apply to VAT refunds of an individual value of $250,000 and above, and the VAT bonds are tradable where financial institutions could purchase them. And from our experience, based on previous tranches of VAT bonds that were issued in the past, the financial institutions, such as the banks, pay 100 cents on the dollar, so you don't actually end up in a discounted bond arrangement. Now, if you decide to hold the bond for its tenure, which is a 3-year period, you will be entitled to the interest attached to the bond. And that interest, questions have been raised around how do you treat with that for tax purposes? Is that taxable interest income or is that exempt interest income? And unfortunately, there is nowhere in the Act which would have, or no amendment passed to the Act to exempt the interest on those VAT bonds. So for all intents and purposes, if you do hold the bond and earn interest, and this is more from the corporate side of things, then the interest becomes taxable. In the case of an individual, interest from various sources, including banks and financial instruments, would be treated as exempt for tax purposes. Okay? So for sole trader type situations, the treatment would be a little different. Okay? Now, sorry, what's your question, Mark?
No, I
Okay.
just wanted to, as we are talking about the bonds and the entrepreneurs taking advantage of the bonds, I just wanted to just give a quick input in advising our members that our investment portfolio is managed by First Line Securities Limited. and the partnership and very good relationship we have with First Line. I am seeing that our head wealth manager is with us this evening, and I want to thank Maxine King for being with us this evening. I know her schedule was very busy, so I am very surprised to see her this evening. I know she was with us yesterday. So Maxine, thank you so much for making the sacrifice to come out again with us this evening. But what I wanted to mention to the entrepreneurs or any member, whether you are an entrepreneur or not, is that one of the services that we provide is that if you need any investment advice, so therefore you are an entrepreneur and you want to have a sit-down conversation in regards to the bonds that that the government is offering, VAT, that we will accommodate through Maxine, who will speak to you, being an investment expert, and guide you appropriately on what and where and how is the best way to invest, whether it is your bonds or whatever investment you want to get into, that she is always willing to advise the members appropriately. So at least you have that peace of mind that, yes, I have good sound advice and I am comfortable with what I can or how I'm investing my monies. So I just wanted to throw that in there too, so that our entrepreneurs do not feel alone in terms of, because sometimes these things tend to scare persons as, oh my gosh, how am I going to do this? I need help in doing this. No, the organization has put things in place to hold your hands and guide you through. Thank you so much, Colin.
No problem, Mark, and thank you for that. And welcome to Maxine King as well. And, I hope that, you also are finding the session useful. And certainly the VAT bonds is a topical thing for tax purposes. As I mentioned, the VAT refund situation has really not been the best. And, what is interesting is the VAT bonds, attract interest of a certain value. I think it's 3.4% that is payable in tranches of like 3 different installments for each year. But under the VAT Act, where you are owed a VAT refund in excess of 6 months, you are actually entitled to interest on that VAT refund of 1% per month, which equates to 12% per annum. So the VAT bonds actually offer you a lower rate of interest, but a faster way to get your cash, as opposed to pursuing the board on the typical interest due for the VAT refunds. Now, I would also say that concurrently, the board is issuing VAT refunds. I would have actually personally signed off on several VAT refunds to our clients. At least hundreds of VAT refund checks crossed my desk. And much to the satisfaction of my clients who were owed these VAT refunds, as it frees up much needed cash flow. And we know, especially in the case of an SME, cash is king. So that, now is the time to really pursue the board for any VAT refunds that are owed to you. And, I will say, take initiative if you haven't received your VAT refunds, and maybe follow up with the board directly, or go with your tax advisors and have a conversation about how they could reach out to the board and see if you could be prioritized in this issuance of VAT refund round that we find ourselves, okay? So we just touched on the issue of record keeping. And as I mentioned, for general tax purposes, it is quite important to retain books and records for a period of at least 6 years from the end of the year of income, or 3 years from the date your VAT return was filed, whichever is later, as that is in keeping with the statute of limitations for VAT purposes. And I want to highlight that compliance is key. And this seminar or webinar rather that we are hosting is, as I mentioned, geared toward assisting all of you by giving you the knowledge needed in order to deal with your tax affairs in an efficient and timely manner. Where you fail to file your VAT return on time, there is a penalty, a fine rather, and summary conviction of $1,000. It has been our experience, however, that this fine has not really been enforced by the Board of Inland Revenue to date. What is focused on rather when filing VAT returns is the timely payment of VAT. And the reason for that is that the VAT payable is actually due by the 25th day of the month following the VAT period, and the penalty is actually 8%, along with interest at 2% per month, or part of a month being levied thereon. So it is very important to get your VAT returns filed on time to avoid being subject to these punitive sums. And just so that everyone is aware practically how it works is, I would have mentioned the VAT due by the 25th day of the month following the VAT period. So that if your VAT period is 1 January 2025 to 28th of February 2025, then your VAT return would be due by the 25th of March 2025, right? In other words, next week. If you fail to pay the VAT by the 25th, the 8% penalty and 2% interest crystallize immediately. So you get that 2% interest from the month of March. And then when April rolls around, another 2% crystallizes. And if May rolls around and you didn't pay it as yet, another 2%, etc., etc. So I just want to give you that practical side of how the penalty and interest is computed for VAT purposes as we make our way throughout the presentation, right? So we are now going to just touch at a high level on the annual returns and the updated filing requirements. Now, for this particular part of the session, I'm going to hand you over to my colleague, Risa Young. I'm sure all of you are eager to hear from Risa. She's been very quiet in this session, but it's really, something that is important for us to cover, simply because the whole annual return filing process has evolved. Quite frankly, back in the days, people would incorporate companies and filing annual returns would really not be as complicated as we find ourselves in this current point in time, with online filings and requirements for registrations and so forth. So Risa will go through some of these changes, just to make the point that we are not experts in this whole area of the annual return filings. We do have a team in EY, our legal services team that specializes in this, but we would have gotten information from them that we will share with you for your awareness and hopefully to ensure that you are on top of your annual return filing requirements going forward. So with that, I hand over to Risa.
Hi, good night, everybody.
Okay, so if we could just pause 1 minute, let me mute my side of the 1 second, everyone. Just bear with me.
Hi, good night, all.
Colin, you would need to mute your mic.
That's correct. So Just
Yes.
bear with me 1 minute. Let me just mute and then I will reshare. And the reason for that is Lisa and I actually in my office, we are sharing an office, so the background noise is kicking up. So let me go
Yes.
on mute and we share my screen. 1 second.
Good night again, all. All right. So, as Colin said before, we are not lawyers, but however, we can touch a little bit on the annual returns updated process of the filing. So, we'll start with the point 1, where Companies Registry has now introduced this online filing system that they refer to as CROSS for Companies Registry Online System. Now, this was launched on the 1st of February 2023. As I know recently, they're implementing a new phase whereby if you have a company registered, you need to link all associated beneficial owners and shareholders to the company. In order to do so, each beneficial owner and shareholder would need to register an individual CROSS account, and then it will be linked to the company. Right? So you're doing this because annual returns are now being filed online as opposed to submitting a hard copy. I don't think the company's registry is accepting any hard copies at all anymore. They will turn you away if you decide to give them a hard copy. In addition to the annual return filing, they now require a verification form, which would be replacing the notice of shareholders, declaration of non-beneficial owners, and declaration of beneficial owners, which also was introduced previously, and they've decided to change this into one form called a verification form. The verification form is going to be used to verify all the shareholders and beneficial owners information which would be included on the annual return. And then, yeah. So there's no standard form for this. The company's registry hasn't issued a standard form, so companies are ideally supposed to prepare their own form based on the information required. So based on the information that you're going to have on your annual return for the beneficial owners and shareholders, you're now going to have to create your own form, and just include information such as the company's name, information on the beneficial owner such as their address, whether they're connected to any other entities, and all of that. I think that's kind of all the updates that we have right now, because the company's registry, they're still working their way through it. They haven't fixed anything yet. They're still kind of back and forth with a lot of stuff. It's a very shady area. So I don't think we have any more updates, Colin.
Well, thank you so much for that, Lisa. And I just want to also publicly acknowledge Lisa's efforts in the preparation of these slides that we are presenting here today. Lisa was the one who actually pulled them together and, certainly played a very pivotal role in making these last 2 days of the webinar possible. So thank you so much, Lisa, for your efforts and your input in this part of the process and for your presentation on the annual returns. I think before we go on to the tax saving opportunities, which would be the last part of our session, it's just important to understand why these changes. And it is also important to ask yourself, how do you want to position yourself as a business going forward? And I will explain what I mean by that. We know that one of the benefits and a very big benefit of having a company set up is that that company, as a limited liability company, is a separate legal entity from the owners. So that if there are any legal ramifications or actions taken against the company for failure to deliver or do something pursuant to a contractual arrangement, the liability will be limited to the assets and the shares of the company and so forth, as opposed to you, the owner, which is a separate legal entity from the company. I know from a legal perspective, there is a concept of piercing the veil of incorporation and going behind the shareholders directly in certain circumstances. But generally speaking, the owners or shareholders are protected from that liability by virtue of a company. And I think all of us on the call would probably know, or ourselves have been part of companies we set up for whatever business ventures we would have been pursuing in the past. Because it's fairly simple, or it was at least back then, to incorporate a company and pull together directors, appoint a secretary, have an address, and basically set up the company. I am saying to you that with the introduction of all these requirements, you need to look at that position very carefully, because you are required now to issue shares, which is not something that was common in the past, but there's a requirement and enforcement of share issuance once you form a company. And I think this is actually a very good move, the individual trust accounts that are created for the directors and shareholders are linked to, I think, BIR numbers, so your individual tax file numbers. So there is more transparency in the process. And as Risa correctly mentioned, the beneficial ownership is an area of focus in these situations. Now, you might be asking yourself, well, why is this process so complicated, and why do all of this to make the lives of everyone more difficult in the process? And part of the reason for it is actually the legislation was needed to help Trinidad be removed from a blacklisting, which was implemented by the European Union when it looked at the whole tax regime of Trinidad. And one of the issues is that, there was a Free Zones Act which existed that was more or less deemed a harmful tax practice, which kind of led us to this blacklisting. And some of the consequences of being blacklisted include the repeal of certain double tax treaties, and really a difficulty in doing cross-border transactions with certain European countries that do not, regard countries that are blacklisted very highly when interacting with them for commercial reasons. So I think the government of Trinidad have taken all these steps, including, but not limited to, the amendment to the Companies Act to allow for beneficial ownership reporting requirements. In other words, full transparency. Instead of having companies that are shareholders and so forth, the ownership goes all the way to the individual owners. And then you have the Special Economic Zones Act, which has been released as an exciting piece of legislation, really geared toward attracting foreign direct investment. And if you do qualify under that act, meeting the minimum investment threshold, you do actually benefit from reduced corporation tax rates, as well as other incentives, such as removal of duties and VAT on items imported, a waiver of property tax, etc. So this Special Economic Zones Act actually repealed and replaced the Free Zones Act. And so these pieces of legislation and others, such as country-by-country reporting legislation, which Trinidad recently implemented. It's not going to be applicable to SMEs per se, but only certain companies where their revenue exceeds a certain threshold, group companies of like 850 million US dollars or above. So it is really specific legislation that all is done with the intention of getting Trinidad, the country, our beloved country, off of this blacklisting and onto grey listing, so that the implications, which are far-reaching, could be mitigated in the process. So that is just to create some context around why a lot of these changes, which may appear to be onerous, have been introduced as part of the annual return process. And you as an individual need to consider, do you register a business name and trade as a sole trader, or do you go through the hassle of forming a company and adhering to all of these requirements going forward? And just to know that the penalties are quite stiff when you do not comply for the company law purposes. All right, so we're just gonna go on to tax saving opportunities. I know a lot of you would be eager to hear what this is about. And this is really tax allowances that are allowed under the Act. You know, nobody's reads tax in their spare time, I'm sure, unless you really are passionate about tax like myself and Risa. So the idea here is to share with you some tax tips that you could use when, you know, approaching your company tax filing obligations. So the first is donations generally are not deductible for tax purposes. So if you as a company make a donation for some charitable or other cause, it is not deductible unless certain conditions are met. And what those certain conditions actually relate to if you make a donation under deed of covenant. And a deed of covenant means donating to an approved charitable institution. Now, the Act says the donation that is deductible is capped at 15% of your total income, right? So there's a limit on how much you can deduct by way of donations. But if you make a donation or contribution toward the promotion or sponsorship of sporting activities or sportsmen in Trinidad and Tobago, then you are entitled to a deduction in computing your chargeable profits for the actual amount incurred up to a maximum of 12 million TT dollars. Now, this is obviously geared toward promoting, you know, sporting leagues. We see corporate TNT getting involved in the sponsorship of the pro league, the semi-pro league, intercal, different things. And, you know, this provision actually allows any contributions made towards those sporting activities or sportsmen to be deductible. Now, there is a definition of sporting activities, and it includes a wide range of activities, including but not limited to badminton, basketball, cricket, football, tennis, different things. I know there was a lobby at one point for horse racing to be included. I'm not sure if it was. So anybody who has interest in horse racing, call me offline and we'll see if that was included as one of these sporting activities which would benefit from the sporting allowance. So outside of that, you also get a deduction for amounts incurred in the promotion of art and culture. And art could take the form of visual or performing art. Where it's visual art, the art must be certified by an art gallery in Trinidad and Tobago. And performing arts really depends on the group. So performing arts, for example, will cover steel bands. So Panorama, we just came out of Carnival, which I thought was quite fantastic and well managed under a state of emergency, if I may say. But during that period, we would have seen different companies, corporations, sponsoring steel bands. And here again, you see this allowance allows for a deduction capped at 12 million TT dollars for promotion of performing arts, such as, local singers registered in Trinidad. You also get, if you are audio, visual, and production company who is involved in the promotion of local entertainment and local culture via television, then you get to deduct 150% of the expenditure incurred in such promotions, capped at 12 million. Now, let me make the point that individually, these allowances are $12 million maximum deduction, but cumulatively, the deduction is also capped at $12 million. Training allowance. This is a very good one. So if your company incurs training in the training and retraining of their employees, you are entitled to deduct 150% of the expense incurred in the training and retraining of those employees. Now, just to be clear, that the allowance here is not that you get to deduct an additional 150% of the expenditure, but rather there's a 50% uplift. So in simple terms, if you provided for a training program for employees and you incurred $100,000 or let's say $10,000 in setting up that training for your employees or retraining of your employees, then you will be allowed to deduct an additional 50%. So instead of deducting $10,000 that you incurred, you get $15,000 as a tax deduction. Isn't that great? So in essence, you get to deduct $5,000 more than what you would have actually spent by way of training and retraining of your employees. So this is a very good one for all of you who have companies and you train employees to note. Corporate sponsorships. Now, this is new, hot off the press. This is actually an allowance applicable for income year 2024. So we are now actually seeing persons taking these claims. So if you are a company who makes a contribution to the sponsorship of public and private schools certified by the Ministry of Education, then you are allowed to deduct the actual expenditure incurred, well, 150% of the expenditure incurred, capped at $500,000. Now, you may be asking a question, is the 150% or the 500,000 the limit on how much you could deduct, or is it that you could claim 150% of up to 500,000 and benefit from the additional deduction? And from our reading of the law, the maximum allowance that you could claim is actually 500,000, which when you gross up means the maximum amount that you could donate and benefit from this 150% step up is actually $333,333. Okay, so that is just a point to note for those who may be inclined to make donations or contributions to school for the uplift of the schools that are certified. And there are requirements where the principal or some duly authorized person within the school must certify the spend as being applied for that purpose. There is a scholarship allowance for nationals of Trinidad who are not employees or directors of the company, no associates of the directors or employees for tertiary education. So you get a tax deduction where you do provide scholarships in those circumstances. There's a recently introduced research and development allowance. So if as a company you undertake research and development, then you are allowed to deduct an amount capped at 40% of the actual expenditure incurred, and basically claim that as a write-off in computing your chargeable profits capped at $3 million. Okay. Now, cybersecurity and investment tax allowance. Now, this is actually a very important one, I think, because we would have seen in recent times breaches on cybersecurity. We would have seen leaks of private information in the public for reputable institutions who, unfortunately, were the victims of cyber fraud and phishing and all these different things that occur on the internet. So this allowance actually gives you an incentive as a company to invest in technology and cybersecurity equipment to safeguard your own private information and benefit from a tax allowance. Now, the tax allowance for the cybersecurity is capped at $500,000. And basically, you claim the allowance, which is actually, I think, 150% of the expenditure incurred, and capped at the $500,000 over the years 2024 and 2025. Now, what is interesting in this scenario is the allowance of 500,000 is actually capped over both years, meaning you claim 250 or whatever the percentage is, but over the 2 years, it should not exceed 500,000 cumulatively. And that is something I think that wasn't abundantly clear when the allowance was first released, but it is now, guidance has been provided to allow for that. So that is basically it for us. I mean, we are almost at the top of 8:30. I think we have reached a point where we could open up the last 10 minutes of the presentation today to any questions that you may have for any of these allowances or any other topic that was covered previously.
Thank you so very much, Colin.
I think, Mark, you're on mute.
No, I'm not. No one is hearing me?
Still not hearing you, Mark, if you're speaking.
Vanilla, are you hearing me?
Yes, I'm hearing you fine.
Okay. All right. Everyone else is hearing me. But I just want to take the opportunity to thank
Oh, sorry,
Colin
my
and
thing was on mute. Sorry, Mark, could you repeat that? Sorry, my for some reason my computer well, not for some reason, I remember I muted it when Risa was presenting, but I didn't unmute it. So I just missed a lot of what you were saying, and my apologies if I continue to say, Mark, I'm not hearing you. Because
not at all, not at all. I loved the technology, and we should expect these things from time to time when we are using them. So that's not a problem at all. I just wanted to express my heartfelt gratitude to both you, Risa and Colin, for your time and your expertise. I know after a long and hard day's work, especially this is tax time, and now we have an election fever in the air. That adds to your burden. It is challenging for you to come out and share with us. So I just wanted to say thank you very much. I want to thank Fenella and Andre as well for their beautiful presentation on bookkeeping and the importance of using Wescue's entrepreneurial spreadsheet. Guys, job well done. I want to thank you all for that. I also want to thank Aaron for helping me man the question and answer section. I really do appreciate that very, very much. I want to thank everyone who is present, and I just want to inform all of you that both sessions will be posted on our website and our YouTube channel. As a matter of fact, day one is already up on the website. So those of you who missed yesterday can immediately have access to it. So I also want to give a challenge here because, while Colin was presenting and everybody's presenting, well, Fenella and Andrew, my mind is always going. So I would invite, I'm not putting you all on the spot, Risa and Colin, no. But maybe later down in the year when things kind of slow down and you all have some more time, I would like to invite you all back again, and this time for some practical, the practical aspect of working out the PAYE, the health surcharge, those sort of things, so that the entrepreneurs, those who really don't know how to do it, they would have an appreciation of what and how to calculate it by you all showing us how to do so live and direct.
Yeah.
So I would really appreciate that maybe later down in the year. We will discuss it, of course, Colin, and see what time is most appropriate, because we really want to ensure that persons have that hands-on experience of calculating the PAYE, the NIS, and the health surcharge, and also, just to ensure that when the calculation is being done, we do so with confidence and we get it right. Accuracy. Yes, Vanilla? Accuracy. One of our favorite words at Westview. Accuracy is of critical importance. For persons who are interested in joining the organization, you can visit our website at www.wesqtt, that's www.wescutt.com. And right there at the front of our website, if you look to your right-hand side, you will see a task mark membership. You just click on that and it takes you to our membership corner, and it has all the requirements of becoming a member of the organization, and we would of course welcome you and work with you to achieve your goals and your visions. And always remember that you cannot grow without having some pain. So therefore, you must be willing to make the necessary sacrifices to achieve your goals and your vision. And we are here for you to hold your hands, to guide you through.
Yeah, talk to me.
Amen?
Amen.
Amen. Yes, so we are willing and able, and always remember, you come to ensure to be vulnerable. We are not here to judge. We are not here to look down. We are here to help you along the way to ensure that you realize your holistic, sustainable prosperity. And to do so, you must be honest. And we will teach you how to say no in a very nice way to persons who seem to always want, and you just don't know how to say no. We will teach you how to say no without using the word no often. I'm getting some emojis and all of that. So we are here for you. We would most definitely, the questions, we would not be able to answer any more questions this evening. It's now at 8:27. But we can assure you that if you post your questions on our Facebook page, we will definitely address them there. My right-hand guy, Travlon, he's always manning the Facebook page. So once we get to the questions, I would pass them on to Colin and Risa. Once I get back the answers, give it to Travlon and it is uploaded on the Facebook page. So I really want, and I also want to bring you greetings from the Board of Directors, who is very intentionally passionate about human development, not only in Western United Credit Union, but throughout Trinidad and Tobago, the region, and the world. Because we may think that what we are doing here stays here, but it does not. One person will tell another person and another person in a conversation tonight, maybe talking to a brother or sister abroad. And that is how everything spreads. And we are here to ensure that we as a board ensure the holistic growth, the holistic development of each and every individual. So I bring greetings from you, from the Board of Directors. And I want to thank all of you for your time and for being here. Spread the word. Part 3 is coming. Spread the word. I'm stepping out here by faith. And Colin, I want you to express my gratitude to your team as well.
Yeah.
I know, Risa, I want to thank you for your dedication, your diligence in putting those slides together for the 2-day session. I really do appreciate it. Colin, I appreciate your expertise, your talent. The bond between us is even greater because alma mater, I must mention that. I must mention St. Francis College.
Of course.
Yes. So I want to thank you. And I also want to send a special thank you to your team who is supporting you besides Risa, because they would have been giving you information, the lawyers and everybody else, the tax experts. Please give them my heartfelt thank you for assisting us this evening to have a 2-day webinar that was truly, truly wonderful, informative, dynamic. I really want to thank you. So thank them as well for me. I thank everyone at the organization. And Dixie, I don't know if your mic is working now, but I would certainly like you, our former Secretary of the Board of Directors, our worship leader, I will appreciate if you can take us out in a word of prayer, please.
No problem.
Wonderful. Yes, Dixie.
Okay, great.
Yes.
Let's bow our heads and thank God for what He has done for these past 2 days. Heavenly Father, as we come to the close of this impactful webinar, Entrepreneurs and Taxation, we lift up our hearts in gratitude for the wisdom, insights, and connections that have been shared today. We thank you for guiding this discussion on optimizing tax strategies and uncovering savings opportunities, allowing us to equip ourselves as responsible stewards of our businesses and communities. Lord, we are especially grateful for the speakers who have enriched this session with their expertise. We ask for your continued blessings upon Mr. Colin Ramsey, seasoned tax expert and partner at Ernst & Young Services Limited. Lord, may you guide him as he continues to navigate complex tax systems and empower others with his vast knowledge. We also ask blessings, Lord, on Miss Rita Young, whose dedication, Lord God, and her knowledge inspires us all. strengthen her in her professional journey, and may her work bring clarity and confidence to those she serves. Lord, bless Mr. Jared Matthews, Assistant Accountant,
Yes,
and
Lord.
Mrs. Fidel Sam, Lord, Accountant of Westview. We thank you, Lord, for their dedication, knowledge, and commitment. Lord, we also thank you for Mr. Mark A. Ferret, our remarkable host and president of Westview. His vision, leadership, and unwavering dedication have been a source of inspiration throughout this event. May his advocacy for superior customer care and cooperative societies continue to uplift communities far and wide.
Yes, Lord.
Father, we pray for every participant who joined today. May the knowledge gained transform their approach, Lord, to entrepreneurship and taxation, leading to growth, stability, and prosperity. Let the ideas shared here bear fruit in their businesses and lives, guided always by integrity and wisdom. And finally, Lord, we entrust our paths to you. Lord, bless us with your guidance and protection as we go forward. And may your grace enable us to fulfill our purposes with courage and clarity. In the name of Jesus, we pray. Amen.
Amen. In the name of the Father, and of the Son, and of the Holy Spirit. Amen.
Amen.
Dixie, I thank you. Thank you very much, as I so fondly call her from time to time, prophetess, because she's truly a remarkable and powerful woman of God. So, guys, I thank you very much for your time. Please remain focused on your dreams as an entrepreneur, on your dreams as an individual. Remember that whatever you want to achieve, it takes focus, it takes discipline, and it takes consistency. And as Ecclesiastes 3:11 says, God knows the right time, the right place, the right person, and the right answer to your prayers. So, sometimes we want things and we want it now. Do what you can do it right, and leave the rest up to God. I look forward to seeing you all in part 3. I am Mark A. Ferret, your host and president of Western United Credit Union, and I bid you a safe good night, and I look forward to seeing all of you again. Good night.
Good night, everyone. Thank you.